And welcome back. Mortgage rates decreased greatly on Friday. We're now down to about a 1.5 year low regarding average 30-year fixed rates. So I brought on Jim Black to kind of talk about whether or not you should actually reevaluate whether or not you should refinance your mortgage right now. So Jim, welcome back to the channel.
Thanks, Jason. I appreciate being here. And it's an exciting time for anybody who's bought a home in the last 2.5 years because they may be able to save some money.
Absolutely. I mean, saving money is a good thing, right? So, I mean, I saw this what happened yesterday on Thursday where rates decreased as well. But again, on Friday, it decreased even further. We're basically on par with the lowest level since early April of 2023. So if you purchase a home or if you have taken on more debt over the past couple of years, then you may want to reevaluate whether or not to refinance as well. So I want to share my screen with you guys. Here are daily rates according to the Mortgage News Daily. I mean, look at these rates decrease, especially compared to the 8% rates we saw back in October last year. For a 30-year fix, the average rate just under 6.3%. FHA and VA loans is around 5.7%. So here's a chart looking at average rate going back to early April last year. So as you can see, I mean, rates were basically on par with around 6.3 to about 6.2% in early April of 2023. Then, of course, we all know that rates surged to over 8% in October. But it's been kind of a bumpy ride, but overall, rates have been coming down really ever since May this year. So one thing I want to touch on, because we're seeing this sharp pullback in rates. Are these rates, according to the Mortgage News Daily, are those rates you actually are seeing in your eyes, Jim? Because you've been a loan officer for about 20 years or so. So yeah, are those rates you're seeing today or not?
Yeah, so that data is normally put together by banking associations. Banking associations normally have a higher margin because they have a lot of bank branches. They have employee benefits. They have to have a higher margin than the mortgage broker element. So when they have an average rate like that, that is not truly probably the most competitive rate that exists. So again, check with your local professional to make sure that you're getting a realistic quote that's custom to your goals. Rates can go as low as about 5.5% today. You just got to make sure that it makes sense to pay costs to get that rate. And so we always like to think about refinancing now or waiting.
Yeah, exactly. Sorry to interrupt. Can you tell us about the margin? How is that, how for someone who is maybe want to potentially refinance, what is that margin? How is that important to them? If you can kind of talk about that. I know the answer to this, but if you can tell the viewers why that margin matters for banks versus brokers, for example.
Sure. So bankers have, again, fixed costs. They have a lot of, think of an old big bank. They have brick and mortar on every corner. They have multiple types of employees. They're offering multiple services. Mortgage is one of their programs or products that they use. For us at Revest and for other mortgage brokers, we only do one product, mortgages. So all of our capacity, all of our operations are geared toward being efficient, getting costs down, and basically giving a lower margin to our clients. So that's why I say get a quote from a mortgage broker, because the margin should most likely be lower than a banker's quote. And there are a lot of studies out there. Do your own homework. But on average, it's about $7,500 to $10,000 difference in overall costs for us to manufacture a loan on the lower side. That savings gets passed to the consumer in lower rates and lower fees.
Okay, that makes sense. So margins, a bank that has a lot of brick and mortar, a lot of overhead, has a higher margin and therefore higher rates compared to a broker that doesn't have all these expenses that larger banks have. And because of that, smaller margin, we can offer lower rates is basically what we're saying.
Yeah, and the other flip side of that too is banks believe if they have cross-sold over 7 products with that consumer, that consumer is most likely going to go with the convenience of staying at that bank. So the banks don't feel like they have to offer a lower rate, which is kind of crazy. But again, the more accounts you have at a bank, the less likely it is that you're going to get a better rate.
Interesting. Yeah. I mean, they feel like they have the relationship already. So why not just reach out to my bank? I know there's a loan officer who sits at their desk every day. So yeah, that makes sense. All right. So I want to make sure that everyone's kind of clear on that. So because rates have been decreasing from the highs we saw back in October, how does one reevaluate whether or not they should refinance or not?
Yeah, absolutely. So the first thing we want to think about is the long-term horizon, the objectives you have. I always look at a 10-year horizon to see if it makes sense to do things. So we have a great tool that we have that I'm sharing on our podcast today, YouTube channel podcast, which is basically a refinance calculator. This calculator tool is free. We're going to put it on the channel that you can use.
Yeah, sorry, I'll provide a link in the video description below if you guys want access to this calculator, which is really great, kind of sharing how your current payment, how that compares to potentially what your new rate or new payment would be if you were to refinance. Sorry, go ahead, Jim.
No problem. So in this example here, we have the bottom numbers are the original numbers. So we're looking at a 550 loan amount and an interest rate of 7% is the loan that they got a year and a half ago or 2 years ago. Let's say that balance became $500,000 and that interest rate was 5.75. In this example, what we've done is we put out a 10-year horizon to see the difference in savings if you refinance. So we see a payment difference of $37.59 down to $29.17. Remember, the balances are different, and right, because we pay down a little bit of principal. But we're looking at a 10-year horizon. So over 10 years in this example, you'd be saving $80,825. So if it cost $5,000 to refinance, it's worth it, I think, to refinance, to spend $5,000 to save $80,000 and change over a 10-year horizon.
Yeah, absolutely. That's really great to see the difference there. So a common question I get is whether or not we should wait or refinance now. Of course, rates are down to about 1.5-year lows. And I think there's this common misconception that once the Fed starts cutting rates, potentially in about 2 weeks now, that mortgage rates will suddenly decrease. So can you kind of talk about how do you determine whether or not the timing is right or not?
Absolutely. So no matter what you do, you can always refinance. There's no thing holding you back from refinancing. I believe that the best approach is to take the assumption that if I'm saving $500 a month, that's a nice savings. That's saving for my college savings plan for my kids. That's maybe investing in my 401k. Maybe it's paying down my loan faster. You have to come up with a number that's comfortable for you as a consumer. To catch the absolute lowest rate is almost impossible. I got lucky doing it in December of 2021 when I refinanced at 1.75% on a 15-year fixed. That was pure luck. It was pure luck. It was not me timing the market. And I'm an expert in this field. So when the Fed lowers the interest rate, all that affects is the cost of borrowing short-term money. Short-term money is defined as credit cards, car loans, home equity lines of credit, over-the-counter rates that the banks can borrow to lend money out to. That is a direct correlation. If that goes down 0.25%, your home equity line of credit rate goes down 0.25%. But depending on the consumer and market confidence numbers and scores, you could have a situation where that was already built into interest rates being lower, so it might not affect long-term rates. Or it might be a surprise for the better. Maybe things are worse than we expect, and that will put a lot more pressure on long-term interest rates going lower faster. So again, it doesn't correlate directly, but if you can save money, why not save money? So.
Yeah, it makes sense. So if you're looking at saving hundreds of dollars per month and your break-even point of paying the cost of doing a refinance is a very short period of time, less than 2 years?
Yeah, about 2 years. Yeah. Yep.
Yeah, about 2 years. I mean, you don't want to have a break-even point 5 to 10 years from now, and then you move, and then you just paid all the fees for refinancing, and it's just not worth it. And so, yeah, I think it kind of goes to like timing the market. It's impossible to time the market. It's anyone's guess how low or how high rates will go. It just depends on incoming data regarding inflation and more importantly, more recently, regarding the labor market. So I think that you're spot on regarding that. You know, people trying to time the market, it's virtually impossible because there's so many things that impact rates in our housing market that are completely beyond our control. So thank you, Jim. Anything else you want to add regarding?
Yeah, absolutely. And again, the question of refinance now or wait, you have to think in your own head, how many hours a month are you worrying about this? How many hours a month are you studying this? Because If you're studying this for 20 hours a month, and we're talking a difference in savings of $25, for example, it's not worth your time to worry about. Just refinance and move on. Like, we get caught up sometimes and try to find the best deal or the lowest deal. We have to look at it longer term than that and say, over 10 years, am I saving money? Is this one less thing to worry about? Does this savings allow me to do more things in my life that I enjoy? And if those answers are yes, refinance. If those answers are no, then wait. Then don't worry about refinancing. But it's up to you as the consumer. We'd love to be a resource for you. Again, there is no cost to get a quote for rates. And again, we're going to put in the YouTube channel link below this little link about break-even analysis on how to look at rates. We're available when you need us to get a rate quote. And that's all I got for today.
Yeah, thanks, Jim. Yeah, I'll provide a link in the video description if you guys want access to that. I think it's an app, but also there's a desktop version as well, right, Jim?
That's right. And we have other tools we'll talk about next week, but this is a simple tool just to think it over with your family and to make sure that, hey, this is worth saving money. And in our example, we showed there was a big enough difference in savings that it was probably worth it for that example to refinance.
Yeah. My biggest takeaway regarding this conversation we're having right now is that I often talk about the rates or the average rates according to the Mortgage News Daily, but also Freddie Mac. But I actually learned something today that they're looking at a survey that may have higher average rates than the rates we can offer. Of course, we're licensed loan officers as well, but you've been in the business for like 20 plus years. So I'll provide a link in the video description for that app if you guys want access to that, but also provide a couple links as well. If you want to schedule a call with Jim Black and I, or just Jim, or just me,
just Jason, whichever way. So.
Yeah, or whatever. Then we're happy to kind of discuss your real estate goals as well to see if it would make sense or not, and we'll give you our honest opinion as well. We had a call about 2 weeks ago with someone who was looking to refinance, and once we kind of talked about their goals and their circumstances, it really didn't make sense at all for them to do a refinance, and you were blunt and honest with them regarding that, rather than saying everyone should be refinancing right now because rates are at 6.2% or whatever they are. So yeah, we're advisors, not real estate pushers. Let's just say that.
Sounds great. Thanks again for having me, Jason, and I look forward to seeing you soon.
Yeah, buddy. Have an awesome weekend. And everyone who's watching today's video, we like you so much and we appreciate you so much for watching today's video. Please like and subscribe. Also, check out Jim's YouTube channel. You just reached what, 200 subscribers, was it?
I don't have a lot. I'm trying to get to 20,000.
Oh, yeah.
If I get to 20,000, we'll have to figure out something that I'll do for your audience also to say thank you. We'll do something pretty fun. So.
That's cool, man. Yeah, I mean, I started off, I had 2 subscribers, my wife and you.
Exactly.
Right? I might have been a third one with a different account or something. I don't know. I mean, we all start somewhere. I posted my first video. I had no idea what I was doing, but yeah, congrats on getting 200 subscribers, Jim.
Thanks so much, everybody.
All right, have an awesome day, everyone.